I want to say welcome to you and welcome to the deep dive. If you missed what I said earlier, or you didn't see the advertisement video, we're going to talk about inventory this morning. It's the number one need in the market right now. And I would say, the spring market that we're heading towards certainly looks like interest rates will not be the thing holding people back by and large. It will be the number of available homes that are out there, and a couple of things that hold people back. We're going to hop into those, and I'm going to sort of tell the story of inventory this morning, where opportunity is at. I have some really good slides for you on this deep dive, but let me go ahead and share my screen. We'll get rolling and get started here. So I'm going to start off with a quote from Mark Fleming. Mark from First American, he says, two dynamics are keeping existing home inventory historically low: rate lock existing homeowners and the fear of not finding something to buy. So you think about this, the rate lock, it's not rate lock relative to the mortgage business. This is somebody that's maybe at 2 3/4 or 3% that says, why would we want to move with this interest rate? And we've talked about that. Now, I don't think that's going to prohibit everybody from moving, but there certainly is a block of people that are in that position that are just kind of staying put. And the other is, we don't want to put our home on the market right now because we don't know where we would go. That's been an issue over the last couple of years, but it's going to become a bigger and bigger issue as we go through this year. We talked about the last couple of deep dives. One, foreclosures, they're not, flooding into the market like many predicted maybe a year or two ago, even through COVID and coming out of COVID, just not happening. And the lack of inventory is what's kept prices from falling dramatically across the country. So, if we were to tell this story of inventory across the country, here's what it would look like. This is a look at inventory going all the way back to 1999, kind of humming along. And then we know inventory jumped up during the housing crisis. And, since the housing crisis, inventory has sort of been on this downward trajectory. It's been depleted. And certainly that was the case during COVID, when everybody rushed in, the meaning of home changed, and everybody wanted to buy a home during that time. And so, we're starting to try to come out of that that hole that, kind of bottomed out there in 2021. The average amount of inventory in 2021, 2.3 months, average in 2022, 2.7 months. And, as interest rates started to rise, we saw inventory grow, not from people putting their homes on the market, but homes staying on the market a little bit longer. This is a look going back to the last year of what happened each month in this country relative to inventory. But what happened in December? See a little bit of a chunk down. And what are we seeing in January? Just hearing and anecdotally knowing, and certainly love to see it in the comments. More activity, more buyers out there, and more buyers, and there just simply aren't enough inventory out in the market for those that want to buy it. And we know a lot of people took their homes off the market in the later months of the year because of the holidays, because of a number of different reasons to get that out there. But let's go back and sort of dissect this picture, because I think there's something here to be learned based on what maybe folks said at the beginning of the year, and really, if we want to kind of look at this past year relative to inventory, I would start to look at new listings. And this is a look at new listings as we started out 2022 and went through January, February, March, April, and May, and sort of the line there was, listings are going to continue to grow, and that's going to compromise prices. There were sort of a dotted line. It was like, gosh, if they're growing this fast, imagine where we're going to be in the fall. And that's what a lot of people said when they made their case for falling prices in this country. Well, what's the reality? The reality is that inventory sort of took this nosedive. New listings coming to market less than 2017, 2018, 2019, 2020, and 2021. You see each one of those years sort of graph their peaks in the spring and starts to fall off throughout the year. That's the seasonal trajectory that that housing and new listings take. And we see in December of this past year, 239,000 new listings in this country. That's down 21% year over year. So inventory is growing, but down significantly. The reason inventory is growing is things sitting on the market that maybe need a price adjustment, maybe need something done cosmetically, maybe there's something, going on there. But if something's priced right, I've always said in this market, it sells, it's selling. And so, if you look at the number of homes that are for sale, it's increased, but we are still below where we were in, I'm going to call it the last normal years in real estate, 2017, 2018, and 2019. So no doubt we need more inventory, and the job is on us to create and go out and tell that story and get the inventory. This past week, I had a chance to be on with Jimmy Burgess. He writes an article for Inman. I don't know if you saw it. It was came out yesterday, but really breaks down the opportunity for expired listings. It's not just expired listings where there's opportunity. And I do believe there are opportunity there. Go in and grab that article, watch that. We do a video together and talk about that. But there's also, just a chance to reach out and talk to people maybe that have more equity than they've ever had before in their home, that maybe bought a home in the last couple of years that we can catch up with and say, hey, have your plans changed? Has anything changed in your life? But it's up to us to have the conversations and ultimately generate those listings out there in the market. The other question that I think will continue to come up is the question of pricing. We've covered that extensively on the deep dive. If you think about the graphic that shows those that say there's going to be depreciation, those that say there's going to be appreciation, we've always said they don't agree on what that's going to look like. But here's one thing that I think we can talk about that we can all agree on, and I see a lot of experts talking about this, and expect this to become a bigger deal as we go throughout the year. And it's this right here. I'll start off with a quote from Odetta Cushy. The housing market remains fundamentally underbuilt. Let me repeat that. The housing market remains fundamentally underbuilt. And as demand rises, which we're going to start to see here, it will be important to boost supply in order for price growth to continue to adjust to more sustainable levels. While builders can't make existing homeowners move, they can add new homes to the stock. No doubt when you look around, we've talked about this for a while, for the last several years. You remember the graphic that we used, the number of new builds that we didn't have over the last 10 years that have led to this issue of being underbuilt in this country in residential real estate. That's always going to keep upward pressure on prices. When we don't have enough supply, you have people that want to buy, that pushes the price up. And that was the story during the pandemic that was fueled by historically low interest rates. Everybody rushed in, pushed the price up. But no doubt we remained underbuilt in this country. If you take this quote from Bank of America, we believe underbuilding over the last decade has absorbed the 2 to 3 million home glut from pre-financial crisis and overbuilding and created a deficit of 4 million homes. So no matter where you look, you're starting to see people say, okay, we're significantly underbuilt and undersupplied in housing in this country. This is a great graphic that I'm going to show you. It breaks down each one of the sort of forecasters and what they think. You look at this graphic right here. Realtor.com says we're underbuilt or short just over 5 million. Bank of America 4 million. Freddie Mac 3.8 million. Morgan Stanley 2 million. You see John Burns and Moody's Analytics below 2 million there. And whether it's 5 or 1.5 million homes underbuilt, whichever number you want to choose there, the bottom line is we need more inventory for those that want to buy. And that's the thing that's kept pressure on prices through this, the last 6 months and certainly rise in interest rates and what's that caused to demand. So our job right now is to go out and have the conversations to lead to the listings that we can help generate. And this is the part of the market that we can help drive forward going into the spring. I think it's on our shoulders certainly to drive those conversations to grab new listings, generate new listings going into the spring market. And one thing I want to mention to you before I turn it over to Jess to see if we have any questions this morning is if you haven't grabbed the 2023 Housing Market Forecast Guide, go in and grab that. You can go to trykcm.com/forecast, get all that information, get that in the hands of the folks that you serve, get that information in their hands, but also educate yourself as to what's coming up this year. So, Jess, I'm going to pause for a second and see if we have any questions. I'll look here in the comments as well and see if I see any questions.
Hi, Dave. I did see a couple come through. We had a whole bunch this morning, so I might have missed some. I know I saw one from Jeff who asked if there are any KCM or Tom Ferry events coming to Boston anytime in the near future.
Oh yeah, we're traveling the country. I've been with Tom for the last couple of weeks. We were in California. We'll be in Texas in February, Florida in March. I do not know specific locations, but I would bet we would be in Boston. So somebody said, I saw a comment there. Can't remember who it was. I'm trying to scroll back through. Somebody referencing, there being up to 7 million homes undersupplied. There are a lot of numbers floating around out there, depending on what they're calculating that based on, but no doubt undersupply all across the country. Any others there that you saw?
One I saw from Francisco who said, with buyers seeing homes sit longer and have price reductions, what do you suggest we say? Offer under asking price or continue to wait?
Well, I think it's a great question. So the
Seems
question
like
is
buyers want to buy, but are still hoping prices drop.
Yeah, right. Okay. So one I would look at and say, okay, here's what my forecast is for our local market relative to pricing. Now, what do we know right now? We know we're undersupplied. Anytime you have undersupply of homes, you have people want to buy those, that's going to push the price up. So that's just a fact. That's economics in housing or any other market. So I would look at the number of homes that are available for sale. I'd calculate my month supply and I'd say, here's what I believe is going to happen. The second thing that we know is happening, likely the peak in interest rates is behind us and we're in a downtrending interest rate environment. As interest rates continue to fall, more and more people will get back into the market. So that's more demand. So we have undersupply, we have more demand. There's a case to be made for that price dropping. So I think things that are in the market right now that may be overpriced, then if you're a listing agent with that listing, there's probably a conversation that needs to happen with that seller. If you're a buyer there, I'd say, here's what I think it's worth, and you can make that offer for that. But no doubt, there's some different things that need to be done right now in real estate. Any others?
Yes, I saw a couple actually come through at the last minute here. Let's see. Alasia asked, how do I calculate the month's supply? Sure. That's something you can touch on. Yeah.
That's a great question. Yeah. You want to take the number of homes that are on the market, active listings, and there's a number of ways you can look at pendings, you can look at actives, all of that. The number of homes on the market divided by the number of homes that sold in the last month. That's going to give you month's supply. It's a great question. All right. So Scott said there, the result's going to be more upward pressure on prices. I agree with that. What's the best way to find housing starts in our city? I would go to the local builders association and say, what are the starts? The leading indicator of any start is going to be a permit. So I'd look at permitting, what's being permitted in my area that's going to lead to starts. So we will wrap on that. Grateful for everybody doing the deep dive. I always say it's a great way to start your week on Monday morning with the deep dive. If you're ACM member, go in and grab these slides, use these slides with your team, with those that you're talking with, buyers, sellers, those thinking about listing their home, so that you can be the educated agent for those that you serve. So we'll see you back next week, and thank you for joining the deep dive this morning.